The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the March 31st. How about that, folks? March 31st, terrific Tuesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, Steve Perseverance Rhodes, who knows for certain that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there had a magical and magnificent Monday. Let's make sure that you and I do everything we can to have a terrific Tuesday. Of course, the easiest way to do that is to always remember that life happens for us, not to us. When you and I, we make that little 2x4 exchange out there, it means that we can find a gift in every set of circumstances that life is going to throw at us. That's the law of life. Life is always testing us, just as these markets. They test the bulls, they test the bears out there. And that, as Tom likes to say, it is a beautiful thing. Now, look, I'm absolutely grateful for your presence here today. Most importantly, I'm here to serve you. So feel free to dial on in at 877-927-6648. Internationally, you can pick up the phone and dial in at 727-445-1044. That way you and I, we can go on a safari. We can go hunting for bulls and bears and whatever it is you trade. Doesn't matter whether it's the futures, whether it's commodities, whether it's currencies, whether it's equities, whether it's indices, whatever it is, you and I, we can always go hunting. We can go look for the pattern that is present out there. This is Terrific Tuesday, of course, none other than Tiger Financial News Network, what we affectionately call the Hotel California. Of course, that opens up at 8 a.m. Check-in time at Hotel California, 8 a.m. with our man, John Logan. Great show today, John. And, of course, this is Steve Rhodes. Welcome to the show. So right now we've got Dow futures trading off about 90 points, trading out at 17,770. S&P back 10 points, trading out at 2,065. NASDAQ futures trading out at 43.57, 58, right around 15 points. Lower. You've got some movement in the currency market. The king of beers, the king of dólares, U.S. dollar index up 455 ticks, trading out at 98.73. Gold's up a buck right now, so we've got a flat market in gold and silver. Silver is flat, trading at 16.68. Light sweet crude back 90 cents, trading out at 47.78. A little bit of movement inside of natural gas. If we take a quick peek across the globe, let's start off, see what we have going on. A mixed bag in Asia last night. You had the Shanghai off 41 points, the Hang Seng up 45. You had the Nikkei off 204. Let's take a look at those markets first. Let's go look at the Nikkei trading out at 19,206. Let's take a look at the candle session that we had here. You know, the Nikkei has this price projection. It's an A to B equals CD pattern that takes you up to about the, well, the first one was 18,556. Let's take a look at that A to B equals CD pattern out here. Array point down here in October of 2014. Sounds like our market. The high out here in December 2014. And the C point of the A to B equals CD was in January. The 1-to-1 A to B equals CD that I've got out here, 20,094. And that's really where the Nikkei is headed to. That's its target line. And I suspect that what the Nikkei will actually do is move up to about the 21,046 range out here. I don't have any volumes. You know, prices just simply been working off an overbought condition for the most part by just really working sideways. That is what looks like is going on inside the Nikkei as we speak right now. If we take a look at the Hang Seng up pretty much unchanged, up 45 points. Now, what the Hang Seng is doing here, as each of you know, let me put this on the weekly chart. It's probably easier for you to view on your screens out here. There's a blue horizontal line going across my screen. That is a swing point. And that's the top of the consolidation box inside of the Hang Seng. That takes you back into November of 2010. That price point is 24,988. We can see that each time that the Hang Seng gets up into that level, and now it's only been up here. It got back up in this level back in August of 2014. Got up there, got slightly above it, but gave up the ghost, so to speak. Not much of a pullback. Really pulls back into the price point here of about 22,565. So the key level to be watching inside of the Hang Seng is going to be this 24,988. Now, where did it close last night? 24,900, even Steven out here. So it's right in this range of trying to be able to break out. Now, when and if it does break out, what you're looking at is a nice A to B equals CD to the upside pattern. Your A point's going to be, this is the weekly chart, so we're looking at a little bit longer term pattern out here. But the one that I would look at is the October 2011 low as your A point. I would look as my B point, the February 2013 high, and my C point all the way back here in June of 2013. Your 1-to-1 A to B equals CD says that the next price target, once this breaks above 25K, is going to be 27,200, then 29,315. That is the move that it wants to make out there. That's going to be a nice move in the markets. Let's finish off by taking a look at the Shanghai, down about 1% last night. But what we do know about the Shanghai is this thing is already broken out above its 2008 resistance level. Just pull this up here. That says that its price target out here is 46.42. Closed out the session last night at 39.28. Again, the chart that we have on my screen right now is nothing more than a weekly chart. Let me switch this over to the monthly chart. What you will also see, or what we will also see out here, is you'll see that the retracement level from high to low, coming back to 2007's high, down to the low back in 2008. Your 0.618 retracement level is 46.42. That is its target area, and that is taking a look at the Shanghai. Now let's go take a look at European markets, the two that we really track here, the DAX and the FTSE. If we take a look at the DAX, off about 1% right now, down 121 points out here. But when we take a look at that, it's really not a big deal. It's not an inside day, but it's not a bearish reversal signal or anything. We know that the DAX here, which has made a 1 to 1.618 A to B equals CD, it completed that pattern. That's our lightning bolt pattern. It completed it on March 16th. Now all we're seeing is just simply an overbought condition work its way off. The most bullish case to work off any kind of overbought condition is simply to work sideways. The most bearish case to work off an oversold condition is to work sideways. And that's really what's going on out here. So you've got bearish signals across the board, and we take a look at these markets worldwide. You most certainly have that here in the DAX. Some people would look at the DAX and say it's off 1% and throw in the towel. Are you kidding me? All it's doing is working off an overbought condition, and it's doing it without really retracing very much out there. Now, the FTSE's got some work cut out for it. The FTSE's really trying to break above its consolidation level, which we know is really at the, well, I guess I probably deleted this accidentally. No, I know it's on this page right here. It's going to give me a moment here. Let me just switch page Roonies. And if we take a look at, well, it was on this page. Son of a gun. We'll have to go back. I guess I accidentally killed that spreadsheet. Let me put this on the weekly, because what we're really paying attention to inside of the FTSE is the I got to go back even farther. It's the 1999 high out here. And it's the 1999 high, even back further, which is where we're really looking for a breakout. Oh, I'll be son of a gun. What the heck? You know, I'm going to do this during a breakout here when I come back and take a look at a chart. But the bottom line is the FTSE here has got several consolidations. The shorter-term consolidation is an 800-point consolidation level, and that's with the close above 68.75. It's trading below that as we speak right now. That level continues to be tested. Right now, you're trading back below that area, and so you got to be a little bit cautious. But once we see a clear break of this area, which I suspect we will, we'll see that during the month of April. That bodes well longer term for the FTSE. That sets up 76.64 as a minimum price target for its indice out there. So that covers the markets worldwide. So now let's go take a look at our markets. Great day yesterday inside of the markets. Great day to the beginning of our March forward. Of course, that March forward really took place last Thursday. So now we've got to come back. Let's look at a couple different time frames out here. Let's look at Let's look at the 120-minute time frame out here. So if we take a look at what has transpired. Now, remember, the low that so far has been put into the ES Mini came in last Thursday, right around the 4:30, 5 o'clock time frame in the morning. That was at a price level of $2,033.25. Since then, we've seen a nice move forward. We've seen an A to B equals CD to the upside. If we take a look at that pattern, your A point down here at that low, your B point looks like right around here at about between 12 and 2 in the afternoon on March 26th, and your retracement down here at about between 4 and 6 in the evening. We've seen a move, the 1 to 1.618, A to B equals CD, before a little shooting star formed out here, and some follow through yesterday. That shooting star taking place as we came into the close yesterday between 2 and 4 p.m. This is a 2-hour chart that we're looking at. And now we have seen just a natural retracement. Now, when we take a look at retracement, so there's your A to B equals CD pattern. There's your price projections. There's your first reversal signal. That was your bearish reversal shooting star, the opposite of the hammer candle out there. So a great signal. And then follow through between between 4 and 5:15 in the evening. Now, let's go take a look at retracements out here. So let's look at retracements of that pattern. That pattern being the low out here, all the way up to yesterday's shooting star pattern. Now what we can see is that we've only seen a 0.382 retracement. So price inside the ES Mini has pulled back to the 2,063.25 number. That is your 0.382 retracement. We've actually gotten down just a tad below that. Price has moved down to a low of 2,062.25. This 2,081.75 level, that was yesterday's high. That is muy importante. I would say 2,082.25. So 50 cents higher than that is really the level that we're watching. Now, if that gets taken out today, to a certain extent, it's really not that big of a deal because of the next lunar phase that comes in tomorrow morning. I think around 8 o'clock or so. I've got to go back and look at my ephemeris calendar. But if memory serves me right, it's somewhere around the 8 or 9 o'clock time frame in the morning. Nonetheless, what's really important for you to watch, what's really important for me to watch, is does this 0.382 retracement level hold 2,063? If it fails, the bears are going to think yesterday was just a one-hit wonder. Now, that to me is a beautiful thing. As you know, I have been looking for the markets. I've been preaching this, I suppose, for a long period of time. So I've been anticipating that the market would make its low sometime this week. Looks like it was last Thursday. Looks like it was off by a few days. Go ahead, shoot me out there for being wrong by a few days. Nah, don't shoot me. And instead, and what I love about the markets, what I loved about yesterday's light volume move inside the market is, number one, the anticipation that the market was going to put in its next lows. And so we've got that, right? We've nailed that within a few days out here. And then what I really like, because it's a contrarian indicator out here, is nobody believes it. I mean, the better case for the markets to continue to move higher, especially when you're up at these highs, is when nobody believes it. And we certainly didn't have the volume yesterday. We're in the, I don't know about, we happen to live in a, in a version of paradise out here. That version of paradise where people like to come and get out of the snow and visit during their Easter break, during their spring break out here. And Lord knows it's in full force in Florida. Is it any wonder that there's some light volume in the marketplace? This is Steve Rhodes with TFNN. We'll be right back, folks. We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So back to the ES Mini, and it's a beautiful setup for the bulls. We got basically a lot of non-believers out there. We had non-believers with regard to the way that the markets behaved yesterday, with regard to light volume. To me, that's a great setup for the markets to move forward. I would have to say, people say, well, how could you have so much conviction? It's because ahead of time, I was already calling these levels of where price would, not price levels, but the markets ought to move up through this time period and then go ahead and we'd be in a choppy market. The markets would pull back, into this March 31st time frame. We've actually seen that happen. So the mere fact that it actually happened, that actually gives me more of a bullish mode, because the next move is for the markets to move higher into the May 4th time period. And then come May 4th, then we're going to want to be able to take a look at, getting out of positions. Now, I cannot control what the market does in the next minute. Anything can happen. There's enough geopolitical things and other issues going on where anything can happen. But what I can say is at this stage of the game, I don't know whether the ES Mini is just pulling back to this 2063 or if 2052 is really the level that it wants to pull back to. If you were to ask me what's my preference is pull back to 2052 so we can add the long positions out there. But if it doesn't, And 2063 is the only pullback of 0.382 retracement. Well, then what it's doing, it's setting up its next A to B equals CD to the upside, with your A point, again, starting off back here on last Thursday, and your B point being that little shooting star candle out here. So we're going to use that. Yesterday's high is a key level of resistance for us, and your C point potentially being what came in between 6 and 8 o'clock this morning. Your next move up would not just be to the 2110, the 1-to-1 A to B equals CD to the upside, but more like 2123. Now, it doesn't mean that it does it overnight, doesn't do it in the next hour, doesn't, I don't know how many days it takes, if any, to get up to that level, but we want to watch this area here. Now, that's on the 120-minute chart. You know, the message, the market's responsibility, buyers and sellers, bulls and bears, their responsibility to you and I is to go ahead and paint messages. It's our responsibility to be able to read those messages. I would love to teach you how to read those messages so that we can unleash the power within inside you. And that means you have to understand the language of the market. And the markets communicate to you and I in Japanese candlestick formation out there. Now, I put together some great workshops on that so that you only have to focus on those patterns, those candlesticks that really have meaning. Because if you go out there and you read books, and if you go out there on the internet and you see all the free stuff that's out there, because I've looked at it, it's going to basically mess you up when it comes to trading and investing. Instead, I just narrow it down for you. Look, if you're interested in that, I've got, you know, great workshops that basically condense 10,000 hours into about a 3 to 6 hour time period out there. But if we take a look at yesterday's stock chart patterns out here, candlestick signals out here, it's a Dow futures and the NASDAQ futures, I believe, on their daily charts out here, both formed a hammer candle on last Thursday. Now, it's kind of cool, not kind of cool, what's cool about the Dow futures, this little hammer candle that it formed, if we take a look at its TAS market profiles, I mean, that's a beautiful thing because price came right down into support and formed a hammer candle. Now, look, folks, that's a bullish reversal signal. At the same time, the Dow was also testing a swing point. It was testing that swing point from March the 11th. Now, look, this A to B equals CD pattern I've got drawn out here, that's not correct because you've got now a lower swing point out here. But that doesn't bother me. But it's also cool about yesterday's candle formation, most people wouldn't pick up on this, is what's referred to as a three-river Morningstar, which can take more than 3 candle sessions to go ahead and complete. This actually took 4 candle sessions out here. Now, what I love about this pattern, this specific pattern, is if we were to go back and take a look at the Dow back in 2009, let me see here, I'll do that. I'll try to tie all this together for you. We got to do this on a daily basis. Let's pull up the Dow. Let me switch this to a daily chart. Let me punch open this screen here, and now let me go back way back yonder. Let's go back to 2009, and we're going to take a look at the candle formation that actually formed back at that low. It was also the same pattern out here. Come on, pull back here. Now, what's cool about this is that this pattern is a very bullish pattern as well. So take a look at this. So right now, you'd almost think that we're looking at, you'd think that Stevie is pulling a fast one on you. I don't pull fast ones on anybody out here. If we take a look at, this is back in 2009, in March of 2009 out here, and you can take a look at that nice big down thrust on March the 5th, March the 6th out here. We saw the nice little sideways move, small bodied candle, same on March the 9th out here, and then one big nice session. Now, this session here on March 10th, a little bit stronger than the one that we saw yesterday out here because it was able to fully encapsulate even that down session on March 5th. Nonetheless, it's the same candlestick pattern. You'll see as I switch back over here, take a look at this, the same candlestick pattern. So what I can tell you is this much. The bulls are out here defending these lows of 17,465. They are important lows out here. But at this stage, I don't think we see them again. Markets move higher into May 4th. This is Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 77 points, straight out at 17,899. S&P down 888. It's straight out at 2,077. Composite off 19 at 49.28. Russell 2,000 down 6 at 12.51. The DAX off 102. The FTSE down 110 points. Gold up a buck. Silver flat. Light sweet crude back 62 pennies. Leading the charge, the upside here, we've got Charter Communications up 14%. I'm sorry, up 14 bucks, up about 8%. Movado Group, MOV is the ticker symbol, up 20%, up 5 bucks. You've got Terrace Corp up $1.51. That's nearly 2%. Tesla's up $1. Mount Pelier is up a buck. That's up 3%. Coldwell Banker Real Estate Group, that's up about 3%, up $1. To the downside, you've got Intercept Pharmaceuticals off 12 bucks. That's off 4%. You've got Diego PLC off about 2.5%, down 260. Novartis, that's off about $1.87. You've got Reynolds American working off a $1.34. Chevron down a $1.49 out there. BHP Billiton down about a $1.30. Okay, so excuse me, where do we go from here? Okay, let's go take a look at the euro. Japanese yen as we speak right now. That's trading lower here this morning. So the expectation should be that the market should struggle as we speak right now to, to move out of this red zone that we're in. Of course, it is the last day of the month. Anything can happen out here. But right now, the currency pair, euro Japanese yen, is trading lower. So it doesn't have wind at its back. So it's going to have an uphill struggle as we speak. Now, where is the euro yen trading to? At this stage, it's right now inside that March 13th swing point. You trade inside a swing point, the high of which is 129.06. It says you can go test the low of that level, 126.91. That's the euro versus the Japanese yen. If we take a look at the euro versus the U.S. dollar, when we take a look at that, we're going to look at retracement levels. So now if we go from the low out here that took place on March 16th to the high out here on a couple trading sessions to go back on March 26th, we will see that the euro really trying to come right back into a level that should be acting as support. It may have actually hit that intra-session, that being about the 106.85 level. It didn't get all the way down there. It got down to 1.0713. So really close to hitting that level. That's your 0.618 retracement area. We'll see if, in fact, the euro can hold. If it can hold here, then that ought to put some pressure on the U.S. dollar index as it moves higher. In fact, on the euro, we ought to put this on a, versus the U.S. dollar, we ought to put this on a shorter-term time frame chart just to see if there's any patterns out here that have completed. Let's take a look at it. I'm just looking at the candles out here. So yesterday we tried taking a look at a pattern. Let me redraw this A to B equals CD pattern. Let's get the correct one out here. And when you're taking a look at your lightning bolt patterns, you've always got to be willing to come back, take a look as the market reveals new information to you, to go ahead and to redraw those lines. So you can see right here at this buck, at that 106.85 level, you'd have a completion of an A to B equals CD to the downside. That would be your Gartley buy pattern out here. At this stage, the way that this TAS market profile box is set up, it says we've got really good support here right now. This is set up at least to bounce into the 107.93 level. As we take a look at it, that's your market profile high. That's resistance. If you can take that level out, then this Gartley buy has very likely gone ahead and formed, at least on the 30-minute time frame chart. That's on the euro. If we take a look at the Japanese yen versus the U.S. dollar, that yesterday had formed a, let's put this not on the 30-minute chart, let's take a look at the daily chart out here. That had formed a really nice pattern. That had formed an A to B equals CD to the downside out here, and this gave us our three-river morning star pattern, big bullish engulfing candle out here. So it looks to me like this currency pair has put in its next bottom, its C point of the A to B equals CD, the upside. That says the next move inside of the yen ought to take into the 122 level, and then 124.50 ought to be its next mark. So that's what's going on. Well, let's take a look at the Great British Pound as well. It is flat as we speak right now, so this is not impacting the U.S. dollar index at all. The Great British Pound, big old key reversal session out here on March 18th. It's really trying to defend those lows of 146, 1.463 is the low that is trying to be defended inside the Great British Pound. Now let's switch over. Let's go take a look at hard currency market. Let's go take a look at Goldilocks out here. You've got gold trading out at 11.87. So the question is, if we take a look at gold, this is kind of interesting. If we look at the actual support level of a new market profile that established itself overnight today, that low, that support area is 1177.90. The actual price that we saw this morning, the low 1178.20. If we take a look at retracements now from low to high out here, your 0.618 retracement is down just a tad lower. 1172.20 is the number there. Has gold found a bottom here just yet? I don't know the answer to that. There is a price point at which I am looking for gold to close above that I am then willing to chase. We're not there just yet. I'm not going to give you that number, but my subscribers know exactly what number it is that we're looking at. They know the reason why. I'd like you to know that reason as well. And you could and you can use this tool if you trade commodities, if you trade gold or silver, then come on over. And even if you don't, come on over to the homepage at TFNN.com. Go sign up for Mastering Probability. You can test drive it for the next 30 days. I promise you, you'll get an education of a lifetime, tools that you'll be able to put in your toolbox that you will be able to use for the rest of your life. There's a set of tools in the expanded edition of my newsletter that will allow you to be the soothsayer, to be able to anticipate what the markets ought to do just simply from a normal seasonality cycle process that will actually help to clear your mind and allow you to trade more freely. Because, one of the hardest things for anybody to do, look, if you had to buy a car today would probably be a good day to buy a car, would it not? It's March 31st. Should you buy a car on April 1st or on March 31st? Actually, they might use a 52, 53-week calendar year, so their accounting cycle might actually close on Saturday or Sunday out here. But let's just let's just come back to just a normal calendar out here. You're better off buying a car today, aren't you? I mean, aren't they going to give you a better discount? Wouldn't you rather buy a car on a day when you can buy it at a discount? Well, it's really the same thing in the market. So the easiest way to buy at discounts in the market and buy those retracements is to be able to anticipate a lower price out there. In any event, at this stage of the game, gold may have found a bottom. I won't know until I see a higher close, quite frankly. And if we don't, then it's just really bouncing around here. We ought to see gold pull back to that 1172 mark as its next area to try to prove to you and I that that is it out here. And yes, gold, just like the markets are forming a bottom, gold is also doing the same. Now, I'm not saying that it's like the ultimate bottom. I'm just saying that it's the next bottom, and it's the one for each of us to take a look at. In the case of silver, silver is flat. It's up a penny as we speak right now. Let's take a look at silver out here. Let's take a look at A to B equals CD to the upside. That most certainly has changed. Let's take a look at retracement levels out here. Silver really doing the same thing. It's got a new market profile that established itself today. Price came down, tested it. So far, it's rejected it. If it fails, which is at the 1660 mark, we will likely see silver make a run for about $16.07 out there. Right now, trading out at $16.69. That's what's going on in silver. If we take a look at light sweet crude back 65 cents, trading out at 48.03. What is light sweet crude? If light sweet crude has found a bottom, and it's given us a signal, no question about that on the daily chart out here. And I think light sweet crude better to be a trader from a shorter term perspective out here. But you got that nice little key reversal session that took place on March the 18th out there. So that becomes your nut to be able to use as your guideline. If you see it close below that, you'll know you will have had a bullish reversal signal fail. Right now, what we have seen is off of that low to the high that was put in here for trading session to go on March the 26th. And that high, by the way, was $52.48. Light sweet crude has come back and it has nailed that 0.618 retracement level. The price projection there was $47.26. The low we have seen this morning, I don't know how this works, $47.28. 2 pennies out there, off by 2 pennies. Are you kidding me? So you may have seen the, and we'll find out if light sweet crude has really changed its trend, what we ought to see on a daily chart is an A to B equals CD to the upside. This could be the spot. If this area fails, meaning 47.26, then you are likely going to see a move that really, I would have to say, would more likely, instead of make a 0.786 retracement and take you back to 45.84, I would say it would take you back to 44.03. Because what we also have, let me do this for the chart so you can follow along here. I'm going to turn off the TAS box. I'm going to turn off the moving averages. I'm just going to turn a couple things off just so that you can more clearly see what I'm looking at here. Let's put the test of that swing point across the top. So what light sweet crude has done this morning is a couple of different things. One, the 0.618 retracement. So we know that, off by 2 pennies. Two, it's come back and has tested the high of that key reversal session, the high of that March 18th level, which is 47.48. So it's tested that area. That's why I say if this retracement level fails out here, this 47.26, price will then close with inside the body, or not the body, will close with inside that candle session. When you close inside a swing point, then it says that you're likely to go test the bottom of that. So light sweet crude, for those of you who trade it, really has had a couple of key tests this morning that will help you to be able to navigate the trade that you may be in out there. And let me go ahead and put these moving averages back on my screen. So that covers the three commodities. Dow's off 118 right now. You've got the S&P down 1180, composite off 25 points. Remember, the levels that we're watching for inside of the ES Mini still hasn't really done much out here, is whether it can break 2063. If it does, then that 2052 area would be the place that we would be watching. Now let's go switch over, take a look at some of the equities that are moving in the markets. You've got Priceline moving to the upside out here. PCLN is its ticker symbol up 15 bucks. Let's go see what it did yesterday. So yesterday, off of the bottom, volume of 470,000 shares out here. Let's pull this back a bit. Whoops, let's pull this back a bit, see if we can figure out what it's doing. Oh, well, here we know what it was doing. What Priceline was doing. Priceline had a nice big breakaway, and that was on February 19th. Big volume behind the move. No idea what was behind that move other than a lot of buyers. 2.6 million shares traded hands on that trading session, and price moved back into that level. I don't know if it actually hit the 1129.98. Let me see. A couple days ago. 1130.86. That's close enough for us. It didn't actually hit that. It was off by just a tad. Well, how many? What tads? Let's see. 2 pennies and 19 cents. 21 cents. 21 cents on a $1,100 vehicle. And it was pulling back with what? Yes, light volume. 447,000 shares out there. So it looks to me like Priceline may have formed its bottom. Now, it also passed a B point. Let's go see what it was doing here as it got past this little doji B point of the potential A to B equals CD to the downside. That was the March 17th candle session. That low was 1144. That volume was 554,000, and that was passed with light volume, both on March 26th as well as on March 27th out there. That says it does not have enough volume. All that Priceline was doing was coming back to a level of where this thing had broken out from. That's on the ticker symbol PCLN. Charter Communications. Let's go see what we've got going on with Charter Communications out here. Charter to acquire Bright House Networks. Oh, how about that? So Charter, and that it's had a nice move to the upside out here. Let's go see what this thing is doing out here. So Bright House Networks, well, they're in Florida, that's for sure. Maybe they're in your neck of the woods as well. Right now, Charter Communications taking out this high volume high, which was from March the 12th. That high volume high had 3.7 million shares, the top of which was 196. Even Steven out there right now, you're trading at 196.02. Geez, if we can take out that with volume out here, that's a large A to B equals CD to the upside. That looks like that may have been its all-time high. Let me take a look at Charter Communications. Let's put this, yeah, I think that it was. Let's put this on a monthly chart out here. Yeah, most certainly was. So Charter Communication is on a roll. So if it's able to take out that swing point today, do it with volume, which is really a hard thing to do. You know, when you have a high volume high like that, oftentimes it is very difficult to go ahead and take that out, especially on the first attempt. But if it does that today, and that means a close above 196 out here, you're likely to see a move to 237 or so. If it doesn't, what you're likely then to see is really a consolidation out here at these levels between 196 and probably the 179, 180 level. That's ticker symbol, by the way, CHTR. We've got Movado Group. MOV is a ticker symbol. Looks like they were out with numbers. Net sales of 133 million versus 132, and I don't see the income. Looks like their fourth quarter income was 10 million versus 7.1. Movado Group gapping up this morning. It's got some nice volume in it, but this thing is running into an area of resistance. Now it's trying to close this window out here. You know, I would say today that if it's able to close above really the 28.90 level, then what you're looking for is Movado Group to run into the 38.01. Right now trading at $30.59. We've got the Dow off 111, the S&P down 11 points. Great.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's off 111. S&P's off 11 points. Composite down 26. It's the end of the month out here. Here's our expectation. I'll set what I believe is the expectation that you should have. Number one, markets put in their low last Thursday. So that's the low. That's going to go ahead and take the markets up into the May 4th time frame. So that is the outlook. Now, what do we expect? We expect that the markets off of last Thursday's low, they just continue to grind higher into this coming Thursday. Friday is the is an off day for us here. Good Friday, the markets are closed, so it's a shortened trading week out here. Right now today with the Euro-Japanese yen trading where it is lower, it's going to be hard-pressed for the markets to really end on an up note out here. That's okay. You take the 260 points or so in the Dow yesterday, less 105 today. No big deal out here. I expect the markets move higher into the end of this week out here, maybe the early part of next week. Then we kind of chop around for a bit. We chop around for maybe 5 trading sessions out there, and then it is ba-boom. It is ba-boom off to the races through the beginning of May out there, and then we get to that beginning of May time period. Then we start taking a look at, a fairly decent chop, probably setting up a decent selling opportunity, which will then lead to your next buying opportunity out there. This is not going to be like the sell in May and go away and come back on October 31st or something like that. That is not the way that you want to trade the market. So the market's really doing what they should, what it is that we anticipate, and that's what you should anticipate as well. Goldilocks, it's hard to say just yet if it has formed its bottom. We know it's tested a couple of pretty decent areas out here. I need to see a close above a certain level, and then I'm go ahead and chase along with all the other bulls out there, but we are not there inside of Goldilocks. So that's what's going on inside the markets, folks. If you're off to start your Tuesday, I want to thank you so much for joining me here this morning. Don't forget the second hour of the Trader's Edge is up in about, if I got it right, about 12 minutes. But stay tuned, because our leader, our supreme leader, Tom O'Brien, he'll be up with the Market Minute in just a couple of moments. So take care, folks, and I'll see you in a few, or see you tomorrow morning. Take care now.